You guys want to learn the best possible technical analysis strategy in the universe? Stay tuned. Hey everybody, this is Spooky's Revenge. We're back with another episode of the Rags to Riches 5-year $500 account series, and today I'm going to teach you two things. The first thing is a really cool strategy, and the second thing is that 90% of it's bullshit. Let's go ahead and get my face out of the way, and then I'll walk you through it. I kind of want to use this episode to highlight a couple things, and the first thing here is you can see that my day P&L here is 0. Okay, and you can see I also have a speculative trade here, negative 24%. So I got my butt kicked. But it's okay because I started buying here. My average is down here now. And the way I did that was dollar cost averaging and reducing risk exposure. That is always my number one priority, especially with these high risk trades. I did make a net profit on this position, but now I have to sell for a smaller realized loss at the end, which is okay because it's all, 0.1% of my portfolio. I'm not going to lose sleep over that. So that's one part of it. And the second part is that, I want to walk you guys through a strategy. I want it to feel like a confident strategy that you can understand, that you can use. It's nice and clean. It's very mechanical, and it works. And then I'm going to tell you why only one piece of it matters. Okay. So this is something we walked through on the live stream this morning, but I want to kind of elaborate on that a little bit. So the whole strategy revolves around engulfing candles. So in this case, let me just erase these lines here. Okay. And for those who maybe aren't technical analysis savvy, an engulfing candle is just when you have a small candle followed by a candle that extends beyond the range of that candle's body before it. So in this case, this candle, the second candle, is engulfing price action of the first one, and it just indicates a strong directional move, and it breaks out of the local price range of the candle before it. So in this case, if we're looking right here, for example, that's an engulfing candle. Let's see, we have a tiny red body here. We have a big, in this case, a white or bullish candle that engulfs it. We have another one right here. We've got another one right here, but it doesn't break over the candle. It just kind of breaks below it. So this one actually opened down here as a gap down. So not quite the same strength. And then what we can do with this is we can start on a higher time frame, identify strong levels of structural support and resistance, and then we can work our way down through the lower time frames to identify opportunities within the ranges and off the levels that we've identified on a higher time frame. So that should always be done first, right? Just look at that top-down analysis. It's very easy. And then once you're down on the low time frames, what I was walking people through this morning is that you can actually take a backwards approach, and you can use the lowest time frames and work your way up to make sure that you're allowing the price to show you things in an incremental way from time frame to time frame to time frame, and that allows the price to have made a significant enough move in the direction you want it to go, and that means that in theory it should continue to go in that direction. So in this case, if I start off on the 1 minute time frame, and I see a bullish engulfing candle, I would then move up to the 2 minute time frame. Sorry, let me just go back here. And the way that we can identify these, let me just skip back to that 1 minute here. What we're looking for when we see a bullish engulfing candles, we want to see a break over this red candle's body, the opening price specifically. Okay, so in this case, this is the opening price. Therefore, we have a low right here from this candle as a potential stop loss if we do see what we're looking for through the various time frames, up and up and up. And then once we see what we're looking for and we've got confirmation in multiple time frames, we can look for an entry, use a reasonable position size, and cut it tight if we lose, right? If it goes against us, we don't want to be in it. So in this case, on the 1 minute time frame, the level was here at 9.59 above that red candle. Now, if we look at the higher time frame, the 2 minute, it's up here above $9.68. So let's push that up there, right? So we have an engulfing on the 1 minute, the 2 minute. Then we want to make sure that the price is pushing up beyond the red on the 3 minute. In this case, it just happens to line up with that 9.68 one, so we can skip up to the 5 minute. Okay, on the 5 minute, the level up here is at the top of this candle, or the opening price of this candle, which is 9.74. So that would then be the level that we'd want to watch on the 5 minute time frame for the price to push above it. And that's when we can consider an entry, and then we can use a tighter level here as a stop loss, and the theory here is that if it's going to go, it's going to go, right? And if it's not, we want a tight stop loss just so we're not compromising. Okay. So in this case, that would have been the entry, that would have been the stop loss. Obviously, a 1 to 1.5 risk reward is in place, and we just lock those profits or allow it to run depending on our strategy. Obviously, that's not what I did here on this this one share here that's 24% down or 23% down. This is a low float stock, and I'm just going to hold it overnight, and it's okay. So with that said, we now have a mechanical system that we can put in place that involves multiple time frames looking for the exact same thing. We can practice it over and over and over again. We can identify specific levels to break. And now I'm going to teach you why it's bullshit. It gives you confidence to look at the 1 minute time frame, then look at the 2 minute time frame, then the 3 minute time frame, then the 5 minute, and then you look for an entry because it's giving you a set of steps to follow. Okay? Realistically, though, what's happened? Right? And this is why I have an issue with all these YouTube strategies and these secret recipes and stuff, because they're all useless at the end of the day. Because they all tell you the same thing. At the end of the day, the only level that matters here is this 5 minute candle. If I'm looking for a bullish engulfing breakout, which is always 974 as soon as this candle closes, that's never going to change, right? The only thing that's changing is this candle here. That's either going to get over that 5 minute close or it's not. Or sorry, the open, sorry. So realistically, it's a waste of time to look at the 1 minute, 2 minute, 3 minute. If we're looking for a bullish entry on the 5 minute, that's all we really need as far as climbing up through the time frames. But it gives you confidence, right? And this is something that our brain just naturally latches onto, and we feel like the more complex or the more intricate a system is, the more moving parts there are that make sense, the more confident we tend to be in following them to a fault, right? Now, in this case, the advantage here is that you're practicing identifying engulfing candles. So that's very good for practice. But it's not very good at time value, right? You're not really making the most out of your time here. And here's an example where it just happens to have worked out, right? If your overall goal in the market is to keep your risk small and to manage your risk, because that is your number one priority at all times, it doesn't matter what strategy you use as long as it focuses on managing that risk, okay? Engulfing candles are a really, really solid, easy to trade way. Regardless of whether the price is going up or down, it does not matter at the end of the day. Statistically, if you are setting a maximum potential loss, let's say you don't want to lose any more than 20 cents on any trade ever, you have a defined risk right there of 20 cents or less. That automatically tells you you have a target 1.5 times that, so 30 cent profit, 20 cent loss max, okay? If you're doing 1 to 1.5. And it also makes sure that you're not buying things that don't fit that specific setup. And the reason you want that specific setup or a specific setup is because it makes sense to you, right? We know that no matter what time frame you're on, if you see a candle, a red candle, price is locked in that range from the open to the close, right? It might have a wick up here, it might have a wick down here. It's just locked in that range from the open to close. It opened here, and whatever happened between then and this candle breaking over that is kind of irrelevant at the end of the day, right? What matters here is that this price broke over where it previously was, the opposition is destroyed at that point, and it should, in theory, continue in that direction. If it does, great. You lock in the profit, you move on to the next trade. If it doesn't, you lock in the stop loss, use it on your taxes as a deduction, and then you move on to the next trade, right? It's a mindset thing. It is never a strategy thing. Technical analysis has pros and cons, and the big con is that it is largely a con. You know, you can learn all the tools, you can learn all the stuff, but ultimately all you're doing is teaching yourself when not to trade, which is awesome. I fully support that. It's good risk management because you're forcing yourself to be patient, and you're managing your risk. You're mitigating it as much as possible. So those are the true advantages of technical analysis. It's never going to be about this strategy is better than that one, or double bottoms are stronger than triple bottoms, or vice versa, or cup and handle is the superior pattern. None of that stuff matters. All it does is help you identify your risk and your profit potential. So you can't control what the price actually does. The only thing you can control is your exposure, and that's why I wanted to make this episode, because I know a lot of people kind of latched on to the strategy I showed them this morning, and it's good because it shows that you guys are willing to think critically about stuff and adopt things that make sense so that you can use them and have confidence. But I also want to use it as an example to show that just because something seems like it has value and it makes sense, and you know you've got all these steps and they're very clean and easy to follow, that doesn't necessarily mean that each step is necessary. And that's true when it comes to managing your portfolio and your positions and your technical analysis and even your psychology. So that's kind of why we pride ourselves at Pennybois, about encouraging people to scrutinize things, think critically, figure out, does it make sense or is it a line of BS? And if it is, on our side, definitely call us out on it. That's you know, we're all about honesty and transparency. But if you're watching YouTube videos and chasing strategies and you think that you're going to get a leg up on the market that no one else has figured out because you saw it on a YouTube video, you got to think critically about what you're being taught and why you're so eager to adopt it, and where that confidence is coming from. Because again, I can give you all the strategies in the world and they will work, more or less, but only if you can follow them consistently. So if it takes you looking at the 1 minute time frame, identifying a bullish engulfing candle, for example, and then setting that level, and then looking at the 2 minute and identifying the same thing, and once that level is breached, you move the level. You go up to the 3 minute, you wait for that threshold to be breached, and then you go up to the 5 minute. Wait for that threshold to be breached, and then you look for an entry. You have defined risk, defined entry, defined profit. That may be what it takes for you to get consistent, and if that's the case, great. I hope that strategy works for you, and in that case, that is the best possible strategy for you because it makes sense and it's working and it's something you can do. But this strategy is no different than any other strategy in that it just tells you when not to trade and how to protect yourself. So with that, I'm going to stop rambling because I'm going off the rails here a little bit, but I just want to really, really drive that point home because technical analysis is not the end all be all, and nobody should ever rely solely on it for success, right? That's why we have passive income. That's why we have position size and portfolio management. It's not just reading candles and charts and trend lines and stuff like that, because that is going to hurt you in the long run if you don't have all the other stuff in place, okay? So again, just really quick, if you're walking up through time frames, picking out bullish engulfings or a specific pattern, let's say you like wedges, great, because you're still just telling yourself when not to trade. You can have confidence in that. But at the end of the day, the only thing that's going to matter is that final check, okay? As far as my positions go, SFE, I am currently on schedule to get the dividend payout. This one pays out on 12/28, which is tomorrow. I'm sorry, it's today, and 6:30 is already pending, right? It's already going to land in my account, probably overnight. But I still have the share, and the ex-div date is tomorrow. So that's kind of interesting. This is one of those unique circumstances, just like MBI. Let's see if I still have that. Yeah, I do. Okay. So MBI, the ex-div date was on 12/18. The payout date was 12/22, but the adjustment didn't happen until recently, and it's, you know, the end of December. So you got to be really careful with the oddball ones, okay? So with that said, all these other positions are just kind of hanging out. Obviously, I'm holding CING overnight. I have the live stream in the morning for the premium Pennybois members, and I will see you guys there. I appreciate it, and if, I say this lightheartedly, if that strategy where you're just looking for engulfing candles on the 1 minute, then the 2 minute, then the 3 minute, then the 5 minute works for you, it's only working because it's forcing you to wait for that 5 minute confirmation, okay? But if that's what it takes, that's what I want you to do, because that is what's going to make you successful. It's not going to be changing strategies every other day, okay? I've done it. It sucks. It costs me time. It costs me money. It costs me sleep. It's not worth it. We've got this stuff to rely on. You can see I got absolutely spanked on this trade, and I'm down 13 cents for the day overall. So take that, weigh it independently, make sure it makes sense to you, and then consider if it's something that you can use to increase your value and your skill set. Then you can focus on learning all the technical analysis and level 2 and all the really complex stuff that we do still kind of need if we want to optimize stuff, but don't rely solely on that. Okay? So thank you all and have a good new year if I don't see you again. And be safe.